Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors, and welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan, and I'm delighted that you have joined us again today as we take an interesting journey today, diverting from our usual path of strictly real estate and into other investment opportunities. And with us today is Robb Reinhold, and he is the owner of Flat Earth Trading Society. Robb has been trading since 1997, and he is the owner of Maverick Trading, a U.S.-based prop firm, and he has just begun a new endeavor, a YouTube project called Flat Earth Trading Society, where traders are made by random and profit from strict position management. So, Robb, take us into the show and share a memorable experience that helped you to be who you are today.
Well, hi, Alan. Thanks for having me on your podcast. And I love to talk trading. And I know that this is going to be a little bit different than what a lot of your listeners are used to, but I'm going to show them that it's really quite the same. Investing, yes, we can invest in different types of assets, but really when it comes right down to it, we all just want appreciation, growth, and income. And we can do that in lots of different asset classes. As far as the question is, what was a memorable experience? I'm going to have to say, I'm going to go all the way back to sixth grade when I had a teacher. He was one of those teachers that didn't go by the textbook. He just taught us what we needed to know in our life. And one day we had a guy come in with a suit and a tie, and he was from a bank. He was a banker. He explained to us how bank accounts worked and how checks worked when, mom would write out a check. I know I'm really dating myself then, and then at the end of that, he gave us all these fake accounts. We had fake bank accounts we had like checkbooks as well. And when we did something good, we got money in. When we did something bad, we had to write a check. And then about a week after that, he came in with the Wall Street Journal quote page. And he showed us how to read the Wall Street Journal quote pages and how we would find the stock, find what it did that day, what was the price. And he mentioned that if we wanted to, we could take our fake money account and buy stocks. And he had these little tickets that he made up where you had to go over, write out the ticket, write out the price, and then that money was debited from your savings account. And then when you sold it, you got that money back. And sometimes it was more money than you put in. I'm sure I was the only kid in that class that cared about it, but that's all I wanted to do. And I would get the Sunday paper at home and I'd look through it and find the best stocks. Now, of course, that only lasted until I discovered, girls and sports. But when I was 18, I remembered that. And I got back into it at a very young age.
And have been in it ever since then.
I have.
So Robb, share with us how it is that you got started. You shared a little bit about the initial experiences that certainly piqued your curiosity about it. But how did you get started when you really decided to take this serious as a professional trader?
Well, that's a great question. And it's a little bit of an lucky situation. When I was 16 years old, I actually was involved in a pretty bad car crash. I had a head injury, pretty bad head injury. They told me there was no brain damage, but we'll see how this goes today. And when I turned 18, I started to get calls from the other person's insurance company saying, hey, we want to settle with you. And I'm like, look, I'm fine. I don't need it. And my dad said, no, this is how insurance works. And the insurance company explained to me that with a head injury, I stayed on their books as a liability. And if they gave me some money and I signed away my rights, then I was no longer a liability for them. So I walked into an office when I was 18 and walked out with $20,000. And I always talk about, you want to know risk. That's risk, putting $20,000 in the hands of an 18-year-old.
Absolutely.
Luckily, my parents told me to save money, and I remembered my stock market stuff. So I put that money into stocks, and over about the next 3 years, it grew to about $45,000. So now I'm like a 21, 22-year-old kid. I'm excited. I'm looking around and thinking, I don't want to go to college. I want to do this for a living. Mm-hmm. So I took that $45,000 and I turned it back into $20,000 fairly quickly. And luckily, I found a good group called Maverick Trading, which I'm now the head trader for and the owner of. It was a firm that you could go in. This was back in 1997, before you had internet at your house. You would go down there, you'd get a computer, you'd have a T1 line, and they would really help you figure out how to trade. And I was fortunate that I was fairly good at it early on, and that's been my career ever since.
Well, taking your 45,000 back to 20,000.
I know, magical.
That yes. Well, that must have been quite devastating for a young person who really, up to that point in time, you really hadn't had a lot of guidance and assistance in terms of trading. So what kept you in the market, in the trading, after a clearly devastating experience?
There are just some things you come across in your life that you just feel like it fits you. When I learned about this and I got into this, I couldn't get enough. When the market closed, I was bummed. I was like, oh, what am I going to do now? When Fridays came along, I hated the weekends at first. It was such an interest to me. And I really just felt like I want it so bad that I was stubborn enough to just keep going. Maybe I should have quit, but I was too stubborn.
So you got involved with Maverick Trading and found some mentors and who provided education and led you down to the path where you are today. So take us down that journey a little bit. I'm sure that just because you started working with a group and you had some mentors and teachers in there, I'm sure everything wasn't roses from that point on. So how did you get from going into Maverick Trading to actually being the CEO and owner of Maverick Trading?
Well, Alan, I know that and everyone out there knows that, yes, now in the information age, we have so much information around us, but it's still hard work. Nothing comes for free. You still have to put in the work. So yeah, it just is one of those things where, as a young guy getting into it, I was really ambitious and I was willing to spend any amount of time doing it. Looking back on it now as an older person, I realize that it just takes time. Things just take time. You just have to just plug away and plug away and plug away and plug away. And that's really what I did in trading. And look, and your listeners, they've done the same thing in their profession, where the first year they were so-so, and then you get better and better and better over time. And that's really just the evolution of becoming a professional in anything.
Well, in some respects, trading sounds like it's a real easy thing to do, but in actuality, it's a very difficult thing to do. I mean, at least to do it successfully. Anyone can get in there and lose money, but it's difficult to be successful. What is it about it that's difficult, and how do we overcome those difficulties?
Man, that is the question. As you said, everyone looks at this stock market and it looks like, oh, that's going to be easy. I just have to buy here, sell here. The problem is we're not very good at doing it as human beings. And I gave a speech at a Trader Expo years ago. And the first thing I said is, hey, listen, you all suck. And you could have heard a pin drop. And they're like, wait, this guy's our speaker? And I said, look, it's okay. I suck too. And I started to do like an AA style meeting of, hello, my name is Rob. I'm an overtrader. I don't follow my rules all the time. I do this and I do this and I do this and I do this. All of those reasons. And again, my reasons are going to be different than yours of why you suck. But in the end, we all have some serious flaws. And these flaws are really based on who we are as people. One of the things we have every one of our traders do at Maverick Trading when they join us is they take a Myers-Briggs style trading personality test, where at the end of it, you have a score says, hey, this is who you are. And at Maverick, we say, do not try to change who you are. That is the fastest way to fail as a trader. So for example, I'm a very strong extrovert. I rate very high on extroversion. Very strong extroverts are guaranteed. I have met 0 extroverts that have not been over traders. What I mean by that, where we click the buttons too much. There's no way to be an extrovert and not be an overtrader. They come together. Now you could beat yourself up and be like, and this is what I did at first, like, hey, dummy, just don't overtrade. How hard is it? Don't click a button. But I kept making the mistakes. When I finally came to terms of who I was and that I was never going to change it, I realized, ooh, I better figure this out, because I can't just be more disciplined because I'm too dumb to follow that. How can I trade in spite of it? And so I started to do a lot of different things in my trading that allowed me to be an extrovert, but it didn't cause me to have losses. And that's really what the key to trading is to know what your weaknesses are. Embrace them. Don't try to change them. Don't try to out-discipline them. You'll never win that match. Just embrace them and say, I really am bad at these things. How can I automate? We have traders that will automate a lot of the things they're bad at. Hey, let's automate your exits. If you're always exiting too early or you're screwing that up, take it out of your hands. Let's automate that and make it to where you don't have to fight that battle anymore, because you lose it all the time.
That's very interesting. I don't think I've ever heard anyone in terms of discussion of the stock market to really talk about that you have to do it from who you are, and that who you are is going to determine a lot of the mistakes that you make.
And Alan, let me bring up that we actually just released that test to the public. If you go to Trader Personality Tests with an S, traderpersonalitytest.com, they can take that test for free.
Okay. Yeah, I'm really quite familiar with Myers-Briggs, so I'm certainly going to go in there and take that test and to see what it tells me in conjunction to my trading personality.
Just curious, what are you?
What do you think I am?
Ooh, I think
should I put that on you?
I think you're an ISTJ.
Very close. I'm actually an INFJ. So,
okay.
Yeah.
Okay.
You only got one
I'm an
wrong.
ENTP here.
ENTP.
Yep.
That's what I would have guessed. So, so yes, that's going to be very interesting. But I mean, the one thing that I've certainly learned about the Myers-Briggs, and I found it to be an extraordinarily useful instrument for me personally. I don't know that it is for everybody, but it certainly has been very beneficial to me in my life in helping me to look at the things that I considered to be flaws or weaknesses in my life, and to take those and learn to use them to my advantage. And whereas you might think of extroversion as your weakness, certainly introversion was what I considered my weakness, and that's the highest score I get on the Myers-Briggs is introversion. I'm just about as far to the top of that scale as you can get.
So you're on the other side where it's indecision.
Yeah,
is really your kryptonite. Where mine is, I'll make a decision on the second.
Yeah,
you have a very hard time getting to that point.
Yeah. Enlightened investors, if you haven't done so already, be sure and click that like button, and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. So actually those, you learn how to use those actually do become our strengths, because they are our strong points, and we just need to learn how to use them effectively.
And yeah, don't fight them.
Yeah.
Fighting them is exhausting. Just embrace them. Embrace them and just learn how to deal with it.
Yep, exactly. So you've kind of hinted at this, but what can new traders do to be successful besides going in and starting off with that test?
Well, I think, along the same lines is you have to find a way that you can invest or trade in the stock market that fits you like a glove. It's the same thing that we just talked about. If you are, Alan, if I sat you down and said, hey, I want you to day trade, first of all, you'd be miserable. I'd be like, hey, I want you to sit here and watch the screen all day long and click these buttons and don't feel stressed out of your mind. You're gonna be miserable. You're gonna hate it, and because of that, you're gonna fail at it. So you have to find a style that fits who you are. It has to fit your life. We're all busy. We're all parents. We're all brothers, sisters. We're all part of our community. You've got to find something that fits you. So I think with your listeners, mostly focused on passive income, I think that's probably the right place for people to start in the world of trading, is that, hey, do something that's a little bit more passive. And I want to kind of dispel this myth that when people, when I tell people what I do for a living, I'm a trader, they're always like, oh, are you a gambler? And I'm like, well, yeah, what I do is I take calculated risks. And they say, oh, do you just sit behind a screen all day? I said, no, that's awful. The whole idea of these people sitting behind their 8 monitors and just sitting there all day long in a perpetual world of stress. Sure, there's a couple of people out there like that. There was a lot more back in the 80s and 90s on Wall Street, but that's pretty much dead. Traders are people like me and you who do other things. Like I have real estate. I do lots of other things in my life. It's just one of the streams of income that I use. So really, it's important to just find that stream that you're interested in and learn about it.
Well, and then new people who are coming into it, I think, may have an easier job than old dogs who've been doing it for decades and decades, and maybe doing it well, maybe doing it excellently, but maybe doing it not so well. What do they need to do to become successful?
Ooh. Are you talking about the new people or the old dogs?
The old dogs.
Okay. So at Maverick Trading, my recruiters that recruit new traders for our firm kind of shy away from the old dogs. And the reason is, the whole saying, can't teach an old dog new tricks. That's not true, but it's definitely going to be much easier for us to get someone who's maybe been trading for a year or two and hasn't built up a lot of bad habits, or getting someone totally fresh. We have people that like, hey, I don't have a ton of experience. And we're like, hey, that's great. We can actually train you the right way. So the biggest thing I would say to the old dogs, to the people that have been doing this for a while, is be humble, admit who you are, and admit all the things that you do. Like I just talked about, like an AA meeting, sit down and write out, hey, these are the reasons I've failed at this. And until I fix these reasons, I'm not going to succeed. You have to first admit that you have a problem. It's again, going back to AA, admit you're an alcoholic. Hey, I admitted I'm an overtrader. I admitted that I blow my stop loss order 1 out of every 10 times. I admit that. Then you go through the process of developing a trading system to where you don't have to fight those battles. Like for me, I change into options because every now and then I would blow my position management. With using options, I can just set it right at the beginning and I can never screw it up. It's literally impossible for me to screw it up because of the way I trade now. I don't have to fight that battle that I continually lost all the time.
So what is an option as compared to any other kind of stock?
Well, I think your listeners and you are going to really find this fairly easy. And I'm just going to give a real estate example. So let's say that you own a house and you can rent a house out. We all know the rental game where you own the house and you rent it out. Now, the people in your house, they only have the right to rent it and they pay you money to rent it, but they don't have the right to buy it. But let's say that you had a renter that said, hey, you know what? I think I might want to buy this house at one day. So you have a renter and you agree that every single month they're going to pay you $1,000 of rent. And anytime over the next 6 months, they can buy the house from you for $500,000. Whatever it is you agree upon. That is now an option. So that person is no longer a renter. They actually now have an option to buy. Now, at the end of that option to buy, if that person doesn't want to buy the property, they walk away and you keep what's called the premium, the money that was paid into you. If they do want to buy it, you have to sell it to them for $500,000. You have to. You made an agreement. So if there's oil that was found on your property and your property is now worth $10 million, too bad. They're going to exercise that option to get it. So it works the same way in the stock market. And this is what I was saying earlier about finding a way that you understand and you like. If you like real estate, this is a trade called a covered call. It's a very simple trade. You buy a stock. So let's say that you like Microsoft stock. and you think it's a good company, you think it's in like real estate, a good area, stuff like that. And what you're going to do is you're going to buy the stock, and then you're going to sell someone the right to buy it at a slightly higher price, and there's a premium attached to that. You keep the premium. If Microsoft doesn't go up to that point, whoever bought the option, they're just going to walk away. You keep the money. If it goes past that point, they are definitely going to exercise the option. You make a capital gain, and you still get to keep that premium. And then you go find a different stock. Or you could do Microsoft again if you still liked it. The biggest risk of that is if the stock goes down dramatically. And that's the same thing with real estate. The biggest risk is if the price goes down dramatically, you're holding an asset that is now worth less than you bought it for. Again, this is called a covered call. It's a very, very basic option strategy. Please don't really do this. There's better ways to do it. But this is kind of the introduction of how options work and what you can do with options.
Well, that helps. And certainly, I think most of us in the real estate industry have a concept of what an option is. And it sounds pretty similar in the stock market there. So you mentioned this aspect of covered call. Is the covered call the same as an option? I wasn't clear on that.
Sorry. So it's called a buy right. So you buy the asset and then you sell the option. So okay. You buy and then sell. So you own it and you're selling an option. Okay. You're just the option seller. The option seller is obligated, but they get the money. The option buyer is not obligated, but they paid the money.
Okay.
That's just how it works on an option.
Okay.
And the great thing, and again, I've owned lots of real estate. I still own lots of real estate. I don't do rentals anymore because these covered calls will never call you in the middle of the night because the toilet doesn't work. That's what I like about them. Mm-hmm. There's always a market for these. And instead of, having to find a renter and, they come over, you set an appointment, they don't show up to the appointment and you got to keep these covered calls are automatic. Mm-hmm. There's always buyers and sellers for them. There's always buyers and sellers. You just click buttons and you make that contract. Yeah. It's a very nice little way to make some passive income.
Certainly, one of the risks with the stock market is it fluctuates, as does the real estate market. But what has it been like? You have been through many ups and downs, the .com bubble, and the Great Recession of 2008, and through COVID. All of those certainly had effects upon both real estate and the stock market. So what's it like to go through those, and how do you mitigate the risk of the fluctuation?
Well, as an extrovert, I love them. I absolutely love following markets. I just get very invigorated by it. But how does a regular person handle it? It really comes down to risk management. And in the stock market, risk management is key. If you don't have that, you don't have anything. Really, you will lose 100% of the time without good risk management. And so every single investment you make must have a really rigid set of rules to where if it goes bad, because I promise you, no matter how much research you do, no matter how great the chart is, no matter whether you're using Fibonacci or Elliott wave, I don't care. Sometime in your life, you're going to make the worst trade in the world. A stock that goes to zero or loses 90%. How are you going to not lose it all? How are you going to not lose 90%? So it's having a plan. And the thing that, again, with real estate, when the whole economy slows down and you need to unload your real estate, sometimes there's not buyers. And that's the scary thing about real estate is that you've got to have now enough money to hold on during those times. In the stock market, there's always a market. Now, it might be lower than what you paid for it, but there's always a market for you to sell. And it really comes down to knowing what you're doing. So that example I just gave you with the covered call. So I'm just going to use a $100 stock. So let's say you own a $100 stock and you sell the $105 call. And let's say someone pays you $1 for that. And so at this point, if it goes above 105, they're going to buy from you. You make $5 plus your dollar. If it stays at 100, you get to keep your dollar. Let's say that you see the market collapsing where you're worried about the stock. It's coming into an earnings report and you're worried about it. You can take your $1 and go and buy a $95 put option. which allows you to sell your stock to someone else at 95. So think about it. You bought the stock for 100. You sold the 105 call. You took that money and you bought the $95 put. This is called a collar trade. At this point, if this stock goes to zero, yeah, you're going to take a loss, but you can sell it at $95 because of that put option, because someone else took that dollar, so you can turn it around. So at that point, you have a $5 loss. You cannot lose any more than 5%. It's absolutely impossible. I don't care if that stock goes to zero. During that option time, you're protected a 5% loss. So during those times, this is where I love options, is that you can really go in and do some cool things. Let's say somebody had a $100,000 portfolio of technology stocks and the market starts to crash. They could buy an option that was worth, they're basically controlling $100,000 of short the market, meaning that, if this one goes up, this one goes down and vice versa. And at that point, totally freeze the value of their portfolio. There's just lots of cool things with options when you get into it. Just with stocks, you really don't have a lot of ways to protect yourself other than sell. And that's really a lousy way to control your risk, is to sell after you've already lost 20% of your money.
Yeah.
And so what people do is they don't sell and then they lose 50% of their money because it's one of those really bad ones.
Well, very interesting. Lots of good information. Todd, so tell us how we can get in touch with you to take advantage of your services.
All right. Well, we have two divisions here. We have MaverickTrading.com. So we are what's called a proprietary trading firm, or prop trading, if you've heard of it before. We bring people in, we train them, and then we back them with capital. So people are trading our capital, and we enter into a 70-30 to 80-20 profit split, where they keep 70 to 80% of the profits, we keep 20 to 30. And then the best traders, they get awarded higher levels of capital. So our websites are MaverickTrading.com for people who are interested in stock and options trading. And if you're interested in Forex, crypto, or futures trading, our division is MaverickCurrencies.com.
Well, Todd, let's go into our last set of questions here and share with us one of your most difficult setbacks and how did you come through that and what did you learn from that?
All right, I'm going to go back to the dot-com bubble. I've been trading for about 2.5 years. I've been doing really well, getting a little cocky. And somewhere in the fall of 1999, I became absolutely 100% convinced it was a bubble. I knew it. How could you not know it? You're looking around thinking, this is dumb. This is the dumbest thing I've ever seen. And so I'm like, I'm going to make so much money when this bubble pops. I am so excited because I'm going to go short and make so much money. And so I found this one stock. It was called phone.com. Now listen to this stock. It had come public at $20 a share. Now this company had never recorded any profit whatsoever. And in fact, had never recorded any revenue either. They had never recorded any revenue. And in fact, they didn't even have a product that they were going to sell yet. They were working on something that might be for a phone or it might be for a computer. So they called it phone.com. This company came public at $20, and in 3 months, it ran up to $100 a share. At this point, the company's worth $4 billion. They still don't have a product. Like, what a joke. And I thought to myself, this is the easiest money I'll ever make. So I shorted 1,000 shares of stock right around $100. And somewhere around $118, I got a little uncomfortable. Because again, I'm short. So every time that goes up, it's losing me money. So at 118, I take some off, but I'm not going to get out of this thing. This one's a guarantee. Around 160, it got really painful more, so I had to get out of more. And it was $216.05. I still remember that exact point. That's where I got out of the rest of mine. The stock did go to $320.
Wow.
And then it went to zero. So I was right. But there's a famous saying in the stock market. Stock market has the ability to stay irrational longer than you have the ability to stay solvent. And I had given up everything I had made and more off that one trade.
Wow.
And it was a really low time in my life. I tell people the stock market has brought me to tears before, and that was one of the two. One of the two times it brought me to tears. And I really thought about, is this really what I want to do in my life? I took about a month off, decided it really was. And I had to scrape together some money, work some extra jobs, got a good amount of capital back together, and made it all back in a relatively short amount of time. That was one of the lowest points of my life. But now that I'm older, I'm looking back on it. I had to pretty much lose it all to understand that I could never do that ever again. I had a wife, a new baby girl. I realized you can never, ever put yourself in that situation ever again. And I never would have understood that until I went through it.
Yeah. Yeah, it could have been much, much worse had you had more capital at the time. So, yeah.
Well, I lost 81% of my capital.
Yeah.
So that's what it cost me.
Yeah. Well, better to learn that young than at 65 years of age, for sure.
Very true. Very true.
Well, share with us 3 good experiences you've had in the last 24 hours.
Okay. 3 good experiences last 24 hours. One of the things I really enjoy is after the market's done, after I'm done with my work, and again, I do some other businesses as well, just making dinner with my wife. We are empty nesters now, which no one tells you how bad it sucks. No one tells you. I loved having little kids around. And I realized that they were my social life. They were my friends. And their friends' friends, they would come over, we'd have a good time. And then they moved out, and I realized, oh, I don't have any friends. I don't have any hobbies anymore because I leaned on them for that. Yeah. So I'm in this weird time of life where, having to figure out what to do on your free time. So making dinner is always great. Having a glass of wine together is always great. I also love to plan trips. So my second one, I love planning a trip, probably more than taking the trip. I love to plan the trip. Last year, we went to Australia, New Zealand for the entire winter, and we're doing it again this year. So I'm right in the middle of planning trip, and I stayed up last night and made all my notes and did all my research. So that was great. And then just today's day of trading was a very good day. It's a very profitable day. And look, one day doesn't matter whatsoever. I've had good days, good weeks, bad weeks, but today was a good day in the market.
Well, how are you putting your success as an investor and entrepreneur to work to create well-being in the world?
Now, that is a really good question. And I had to come to terms with this years ago. A lot of people in their work, you can point to something that you literally are doing for humanity. I looked at my life as a stock trader and realized I'm more of a leech on society than a builder. Like I don't, with my trading, I don't really contribute anything to the well-being of society. And I didn't love that when I came to that realization. So I love to teach people about having to just basic stuff about how to take control of their finances and how to do investing. I'm very, very passionate about teaching. I love to teach. I teach as much as I possibly can. And again, it's not all on stocks. Sometimes it's just basic money management. I'll go to the school and I'll just talk about basic finances of how to not get into debt or how to get ahead in life, which is you have to take some of your money that you make working a job and put it into an asset that will go up in value over time. That's actually a very simple concept. It's not an easy concept, but it's simple. If you started from the day you were 18 years old and you put $10 at first, and that $10 you went and you bought a little silver coin, or you got a little bit more and you bought a gold coin, and that's all you did for the whole entirety of your life, you're going to have a pile of gold and silver coins at the end of your life, and you're going to be wealthy. It's a simple concept, and I love to get people to understand that concept early on, because then they can employ it and they can do it, and it really makes a difference. But as far as trading goes, I've had to find other ways to get back to the world. So being charitable and teaching is really where my passion is.
Well, imagine that you have come to the end of your life and you lay on your deathbed. What do you look back on with your greatest sense of joy and fulfillment?
No question, being a husband and father, all the work and effort that I put in, and everyone out there. At the end of your life, and you're on your deathbed, are you going to care about your job, your work, how much money you had? No. You're going to care about the personal connections you had. That's it. So I've had a motto my entire life: live with no regrets. Meaning, if there's anyone who I love, I tell them I love them as much as I can, because I don't want to die with them not knowing that. If there's anyone who I've wronged, I want to fix that wrong immediately, because I don't want to die with that regret. If there's any vacation I want to take, I want to go up this mountain, I do it because I don't want to die with regrets. And that's my goal, is to be on deathbed and just smile and just be like, I did it. I did everything I wanted to do.
Well, Rob, wonderful having you with us. Wonderful insights you have shared with us. This opens up certainly an avenue for diversification for our viewers and listeners. So thank you so much for being with us. And enlightened investors, thank you so much for being with us again today. I hope you enjoyed the show as much as I did. And please take a moment to like, share, and if you haven't, be sure to subscribe. And it would mean a whole lot to us if you would go to Apple Podcasts and leave us a rating and a review. Until next time, live abundantly. We'll see you in the next episode. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.